Hello, everyone. My name is William Mucker. I am a client executive with Camaplan and would like to thank you all for joining us for today's webinar, Global Uncertainty and Conflict, Precious Metals Investing with John Barron of Neptune Global. As a quick note, please be aware that John will be answering questions at the end of the presentation. However, feel free to use the chat and/or Q&A function on your screen to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we do have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, John.
Thanks, Will. Thanks for everybody for joining in. I really appreciate it. And, just to give you a little brief overview, it's going to be a fairly quick presentation today to give you the best value for your time. So please stay throughout, probably somewhere in the neighborhood of 15 to 20 minutes, but we have a lot of good stuff to say. And given what's going on, it's pretty important stuff here. So let me start by sharing my screen. And again, welcome to Global Uncertainty and Conflict, Precious Metals Investing. My name is John Byrne from Neptune Global. And here today we are talking about precious metals with a particular focus on gold, but we'll touch on some other stuff in metal space as well. And to give you a little bit about ourselves, we are headquartered in Wilmington, Delaware, 21-year-old company. We are a full-service precious metals dealer. We do bars, coins, vaulting, as well as delivery business. We do retirement accounts. We do cash accounts. We do institutional business as well. And we are also developers of innovative and patented precious metals investments, such as the PMC ounce and the gold and silver vault accounts. And we've been featured in the past in MarketWatch, Forbes, Wall Street Journal, all the publications and channels you see below. And to start off here, to get this kicked off here, we need to look at where we find ourselves right now. Our present circumstances, economically, politically, geopolitically, they're all very interesting, as I'm sure you all know. For starters, we have a tighter monetary environment here. Interest rates, the policy has been higher for longer. And the result of that has been a rather catastrophic bond market environment across various bond markets, government bonds, credit, everything there. And there's a lot of talk that the Fed under Chair Powell is looking to raise rates until something breaks. In other words, to just keep going until they can't go anymore. So we'll see what happens with that. But the resulting carnage in the bond markets has been definitely palpable here. And to that effect, inflation is very much around. Even just recent numbers, today's durable goods numbers and pending home sales numbers both ran hot, much higher than expected. So the idea that it's just gone and it's over with, not so the case. We've had an ongoing war in Ukraine. That's going to be 2 years, I believe, in February. There is absolutely no end in sight to that. The Middle East reignited in a big way a few weeks back, and there's definitely, war clouds there that could potentially make it a much less localized conflict than it is right now. So we need to keep an eye on that. And there's always the others too that could potentially flare up here. There's a lot of talk about Taiwan and China, and the Korean Peninsula comes up from time to time as well. So keep an eye out there. Lots of flashpoints, lots of potential for escalation there. Now, in response to that, these conflict places and these flashpoints and a lot of the sanctions that have gone along with them there's a big global geopolitical and economic realignment underway right now, and it's looks like it's only just beginning. And on top of that, across asset classes, well, we see the S&P is still, I believe, up for the year to some extent. It's definitely been challenged the last few trading days, without a doubt. So keep an eye there. But in domestic real estate, the effect of higher interest rates has been pretty heavy here. We're looking at, I believe, we're somewhere in the neighborhood of 8%, on 30-year fixed mortgage rates. And contrast that to a few years ago, we were looking at about 3% there. So the effect that has on the real estate market is very significant. Now, on the political front, congressional leadership has been in complete disarray to some extent until yesterday, when we had a new Speaker of the House appointed. So, he's just getting started. So keep an eye on that for sure. And as we all know, an election year is going to be underway very soon. So you're going to see a lot of election talk as that's going to kick off in the new year. And U.S. dollar dominance, as a part of that realignment we spoke of before, that's definitely being eroded. So keep an eye there. This is a work in progress here for all the reasons we touched on with conflict points, things like that. It's definitely a changing landscape there. There are increasing efforts on the part of the BRICS nations to move away from the US dollar. And we're going to go deeper into that shortly. Energy has been a roller coaster over the last week. At one point, it was above $90 a barrel for WTI, West Texas Intermediate. And we all know the effect that has on gas prices, manufactured good prices, everything. And also we spoke about inflation, but deflation is also a concern here. We find ourselves in a conundrum here. We see bits of an overheated economy, and then we'll also see data about an economy hitting the skids. So what's more important here, or do we have to live with both for a long time, inflation or deflation? And for our purposes, the purposes of our discussion and the products we're speaking about, central banks all over the world have been purchasing a lot more gold, oftentimes at the expense of other things they might buy, such as U.S. Treasuries. So something to consider there as well. Now, to get into the meat of it, I wanted to go through this because a lot of what I'm going to discuss has to do with us as gold people over here, let's say. We've hit an inflection point when it comes to the gold price here. Now, if you look at this chart, this is from basically, this is from May up until the present here. And you can see a change in direction here. Now, if you look at May and June, you'll see what has also characterized a long period before that, over a year, whereby as interest rates went up, gold went down. Now, look very closely to the right of this chart, and you'll see it kind of shifts along the way. But if you look at the beginning of October, you will see a very significant change that has taken place lately. And that is a lot of what we're going to go through here. So we have a fundamentally changed relationship as of very recently here. Like I said, much of the past year has been characterized by gold reacting negatively to rising interest rates. And the previous perception was that rates going up in treasuries, things like that, mortgages, treasuries and all related products, let's say, that indicated that the Fed was effectively doing its job. It was on top of containing inflation. It was doing the right thing. It was going at it the right way, right course. But again, you look recently, look at the beginning of October, and something has fundamentally changed with this relationship. Gold has been going higher with interest rates. And it's important to note that this isn't just a reaction to what took place in Israel a few weeks ago. It started right before that, I believe a day or two before that. It's like the chain was broken here, and gold started going up along with interest rates. And since then, what we've seen out of the Middle East, in combination with everything else, you've seen increasing geopolitical certainty, which has exacerbated this move in gold higher. And it also begs the question here, is the market perceiving that the Fed is no longer effectively containing inflation? So it's important to note that this could indeed be the case. Does the market in gold and other assets potentially no longer see the Fed as being in control at the helm here effectively when it comes to managing inflation? Now let's take a look more closely at gold and to an extent silver. Gold has been traditionally used as a hedge against inflation. Historically, this is not a recent thing. And it's also been essentially the asset to turn to in times of global upheaval. Now we see a potentially weakening dollar here, and in spite of this higher for longer interest rate policy. And where do we turn to in terms of data points for a potentially weakening dollar here? Well, let's see. 600 billion in debt was issued by the U.S. recently in 1 month's time. Since first quarter 2020, there's been 10 trillion in debt issued. So keep that in mind when considering how strong the dollar can stay as we continue to go through this. And again, this does not look like it's a trend that can be reversed in terms of indebtedness and further U.S. debt issuance, given everything going on and given its commitments worldwide. Now, central banks continue to be massive net buyers of gold, among whom, and this is just a short list right here, China, India, Turkey, Russia. 2022 alone was the highest net buying since 1967 among central banks. And the first quarter of 2023 had even outpaced that. And now switching over briefly to silver, you're continuing to see demand for green power alternatives, and silver factors very much into that and typically tracks the price of gold. Now, forecasts out there. Now, when you look to the big banks and investment banks, you generally don't get a very sort of positive tone about gold typically. It's not really something they're interested in. Now, that said, Morgan Stanley recently put out a bullish piece called Time to Buy. And there was a question mark behind it, time to buy. I should have put that in there. However, what they were indicating was that basically along the lines of their interest rate forecast, which is a drop in interest rates in response to deflationary forces upcoming, they had noted that in the past, the gold price had increased 10% for every 100 basis point drop in rates. So their thesis is that, yeah, gold looks good because of what they feel is coming down the pike, deflationary wise and slowdown wise. Now, Bank of America has a $2,200 price forecast, by the end of the year. Something to keep in mind. As of this time, we're looking at right around, last I checked, right around, I believe, 1,980 per ounce on gold. And then the BRICS emergence. The BRICS emergence is a very important thing to turn to when considering precious metals and when considering the overall environment, politically, economically, everything. And we're going to go deeper into that. Now, the BRICS movement continues to strengthen as it goes through this realignment in response to the things we mentioned before. Now, the original members, Brazil, Russia, India, China, and South Africa. There are others joining in sympathy now, Saudi Arabia, Iran. Now you take just those people right there, those countries right there, and collectively you see a massive collective of resource and manufacturing providers, manufacturing, oil, gas, minerals. It's all within that group, not all, but it's very heavily concentrated within those countries. Now, countries in general, as this BRICS movement gains steam, it's in response to countries rethinking the wisdom of dollar reliance. Trust in the US dollar as a global reserve currency is definitely not what it once was. And given what we've seen in the conflict zones over the last couple of years, a lot of countries don't want a chance being on the wrong end of a weaponized dollar and its payment system, SWIFT. So they want other options. And to give a great example of this, recently in the past week, China recently purchased oil from an undisclosed seller in a digital yuan. So they used essentially a central bank digital currency to purchase crude oil outside the petrodollar system. Now it's something we've seen over the past many years, talk of the death of the petrodollar. And if this isn't indicative of that, I don't know what is. So just think about that for a second. So a massive oil purchase outside the US dollar. So that has happened very, very recently. And it is definitely something to keep an eye out for because there's going to be more where that came from. And For our purposes here, there's still very much talk of the BRICS countries looking to issue a currency backed by gold in order to stabilize it and in order to make it more viable and to rival the euro and the US dollar. So keep an eye out for that. That conversation is very much underway, and there are efforts to make that happen. Now, in terms of investors and the precious metals, just kind of going a little more tactically here. In terms of its uses, its utility, diversification, number one, and reduction in volatility, number two. Now, also, as we went through before, and along the lines of BRICS talk and everything else that we went through, it's a possible refuge from a weakening US dollar. So just to kind of illustrate how it works, the weaker the US dollar, that means the less gold it will buy. So that would mean that the dollar price of gold is higher. So, if you're potentially concerned with a weaker dollar, definitely look to gold. Now, gold is also known to perform in inflationary and deflationary environments. So there is that to consider as well. It's definitely it's a choice to turn to in times of uncertainty, economic uncertainty. Now, it also flourishes outside the world of debt creation, right? So there's no, unlike the risks of fiat currencies like the US dollar, the euro, everything else, it exists outside of any place where you can essentially print more. And it also exists outside the internet and the virtual world, unlike, say, cryptocurrency, which you will need some kind of internet access to it to utilize or to access at all. And central bank digital currencies, which have very much been on people's minds lately, the precious metals, gold, silver, all of them, they exist outside of that. Their value has nothing to do with any of those things. And it's also a hard asset. When we talk about hard assets, gold is right there, gold and silver. They are hard assets, and they don't have the carry cost and maintenance costs of others. For example, real estate, which has that taxation maintenance cost that factors into it very importantly. So let's take a look here. Now, why are precious metals so unique and especially well suited for today's world? Number one, they're liquid. Gold and silver, they're just about as liquid as it gets. These are very, very, especially gold, heavily traded markets. They trade, they're trading constantly globally. So liquidity is definitely there. Portability, right? An ounce of gold is not very big in the physical space there. Divisible, you have various sizes you can put into gold, silver, the other metals as well. You can definitely slice it and dice it many different ways. Now, it's also, gold has been accepted as money for thousands of years. And like we said before, there is no counterparty risk. Now, to expand a little bit upon that in contrast to other assets and asset classes, stocks, ETFs, equity mutual funds, are there counterparty risks there? Yes, you are investing in operating companies, and the investment companies, in the case of ETFs and equity mutual funds, that purchase them. So there is definitely counterparty risk there. Bonds, any kind of fixed income credit instrument, and funds that contain them, well, you're a lender, yes. So there's absolutely counterparty risk there, as your risk is that you don't get paid back. Now, real estate and REITs, counterparty risk there as well. Now, mining shares. Now, oftentimes, people will turn to mining shares as kind of a substitute for investing in physical precious metals. Now, mining shares will typically track the price of metal. However, the thing is that they're operating companies in and of themselves. They have their own internal issues, they're levered up. There's all manners of things. So you're investing in a company, to put it bluntly there. You're not investing in gold or whatever the underlying metal is that they mine. You are investing in an operating company with operating company concerns. Gold and silver, ETFs and other such derivatives on the metals. Now, you're buying shares in a trust, and your claim to physical metals lies deep within the fine print of those. And if you look at the gold and silver ETFs out there, and you see if there is even a claim on actual physical metals ownership for delivery underneath, it is often a very high hurdle that most investors cannot achieve, and there are significant costs involved if they are achievable. And yeah, to round it out there, physical precious metals, no counterparty risk at all there, none whatsoever. They don't involve ownership in a company or a trust, and it's direct ownership. And just to hold precious metals, there's no taxation. So there's no there's no taxing your holdings. You know, you go to sell, that's a different story, but just holding it and owning it is untaxed. Now, here's a little point we'd like to bring up in these presentations, that if you run a price chart of the Dow Jones over the last 20 years versus gold, it's rather telling. Gold has performed very well, definitely much better than the Dow Jones 30 over the last 20 years. So it's food for thought. It's pretty self-explanatory. And yeah, keep that in mind. You know, there's a lot of press out there that seeks to discredit gold as a viable investment, and this is definitely evidence to the contrary. Now for a quick look at the other metals, we touched briefly on silver, and it's considered money also. Pound sterling, that term, that comes from, it comes from this here. You have major industrial usage in green solar power and other things as well as jewelry. And silver has a much smaller and more volatile market than gold, like we went through before, but it does tend to track the price of gold. So they often move in tandem. There are definitely some they diverge sometimes, but if you look at long charts between gold and silver, you see that they generally travel together. And there's always talk out there of the COMEX supply of silver shrinking. So keep an eye on that. And now platinum and palladium. It's important to note, that fossil fuel demand, as per The Economist, is forecasted to be the highest ever in 2024. And platinum and palladium come into their own in the use of catalytic converters. So in combustion engines to basically mitigate emissions, platinum and palladium, that is their main usage right there, in addition to electronics, catalysts, things like that, some levels of jewelry usage for those. And it's also important to note that there's a scarcity value, especially geopolitically, in terms of platinum and palladium. Palladium is especially so. South Africa and Russia are the biggest producers of both, and they account for a very massive share of overall platinum and palladium mined out there. So there's definitely that value prop in terms of platinum and palladium as well. Now, to conclude here, we have escalating levels of global conflict here, and we have a much more unstable and growing more so environment than was previously the case in months, years past. Inflation is definitely a reality. We've seen it for a few years now, and we also have a simultaneous reality of global slowdown that stares at us here. So you look at both of these forces and question whether either of them are going anywhere, and it's unlikely that they will. And in terms of price action in gold, we seem to have hit a major inflection point there. The interest rate and gold relationship has changed. Keep an eye on that. That's very important here. And overall, as we went through with our BRICS slide over there, international reliance on the US dollar is waning, and that is by design, for sure. That is a development that we are watching, and investors should watch as well. And the precious metals overall, they have a solid, stable, and time-tested value proposition as hard assets, as diversification tools, and as potential volatility reducers. So that is what I have there. Now, a couple of things here. If you go to our website, you can reach us via our website, and all our contact info is on there. And we also have some fact sheets on our products here, including the vault accounts, the PMC ounce, which is a combination physical product of gold, silver, platinum, and palladium. We have a mobile app that allows you to track prices in the precious metals and some cryptos as well. It's not a trading app by any means, but it's a very handy and convenient way to keep track of prices and price movements. And just a quick note, in the past, we have been featured in the works of someone many of you may recognize, Jim Rickards. So he has definitely been a fan of our products in the past and still is. And you'll find Neptune Global and its products mentioned in some of his works. So I very much appreciate it, and yeah, definitely keep an eye on the metals, and you know, as Will said, definitely do your own due diligence here. We are not financial advisors over here, but yeah, I hope that was eye-opening and useful for your investing endeavors going forward. And I'm happy to take any questions you might have.
Great. Thanks for all the information, John.
Of course.
Very eye-opening, like you said. As John said, now's a great time for questions, so please use the chat and or Q&A function through Zoom to pose your questions for John while we have his time. We do have one question that came in while you were going over the different types of assets there. Can gold compete with digital? How does it stack up?
Well, they're fundamentally two different things, right? One is a physical asset one is a physical asset and one is not. Now they're very, you'll hear talk that they both sort of react to the same things. And, here's the thing, right? One crypto is very much different from another, but intrinsically gold has value, but, crypto does not. Its value is determined by, how much people, essentially it's determined in the virtual world. So in a sense, there's a very big difference between the two. And in terms of your safety and security and keeping it and storing it, the two couldn't be any different. So I kind of think that it's an apples and oranges sort of comparison here. There's also questions of volatility and risk tolerance, things like that, that any investor would need to consider within that space. So, in a sense, they're definitely both digital assets and the precious metals both serve as alternative assets and ways to get your money out of the system. But in terms of trust and history, gold is definitely has a much longer track record and a different set of circumstances in terms of holding, storing, and potential liquidity when you factor in internet, the reliance of crypto on the internet and virtual world.
Great. Thank you for the answer. Thank you for
Oh, you're
that
welcome.
question, Catherine. To build on that, so are you saying that gold has been more popular from your perspective among investors, or
I can't really speak to crypto because we don't traffic in it ourselves.
I'm talking about, sorry, excuse me, I should have
Oh,
specified between the other metals, not crypto per se.
Oh, okay. In terms of gold versus the others, gold is essentially the flagship precious metals product over the years. Now, silver is more essentially attainable. When you look at the price per ounce, it's significantly lower. Silver, there's a potential for more volatility in silver, which is not necessarily a bad thing, right? It can move quicker and higher much more easily than gold. So, like I said, it's got a lower cost per ounce, which makes it, for some, more approachable. However, silver is not owned by central banks, and there's a different sort of audience, and it has those deep, intrinsically industrial uses that gold generally does not or has a lot less of.
Okay, great. Thank you for that. Another question, obviously this question is going to come up one way or the other. Um, Retirement accounts, precious metals can be purchased and held in retirement accounts. How has the process been? Have you? How is your perspective on holding precious metals within your IRA or 401k?
It's very easily done. Now, to the audience, Campbell Plan has been a business partner of ours for many, many years, and it's very easily set up and transacted. It's a matter of some quick paperwork, some phone calls, and we can absolutely make that happen. So you can get tax advantaged ownership of precious metals using retirement funds, IRAs, Roth IRAs, rollover IRAs, those sorts of things. So it's very much something that's easily achieved in terms of putting metals to work in retirement accounts.
Great, thank you. And we also note that we do have that streamlined process set up with Neptune, so it makes it a lot easier as well. So John, I think that's all of the questions we have coming in at the moment. If you have
Excellent.
any closing statements, I know you had an ending slider at the very least. Somewhere there people can contact you or Neptune that may be watching this recording in the future. Actually, we do have a question, a last minute
Hey,
question
Carlos.
right before the buzzer. When I buy gold, do I own a physical piece of metal or is it a piece of paper that backs it?
The former. It's true physical ownership. So it's not not shares in a trust, not paper, not a claim on gold or any kind of certificate. It is actual physical ownership.
Right. And when you purchase it through an IRA, there are
Mhm.
some rules put in place by the IRS. It is physical gold, but it has to be held by a depository that guarantees that you can't have physical receipt of the asset until it's distributed when you choose to do so.
And and to that effect, we Neptune Global and Camo Plan store domestically here in the U.S. in Delaware.
Correct. So thank you for that question, Carlos. I appreciate it. And where can people find you and Neptune Global if they have any questions that they didn't think of on the presentation today, or if they're watching the recording in the future, where can they get those answers?
Absolutely. You can reach us at 302-256-5080. That is our main number. And any of us can help over here, myself included. NeptuneGlobal.com is where you can find us there. We have a live chat function. All our contact info is on there as well. So yeah, give us a call. We're always happy to help.
Great. Thanks so much, John, and the rest of the team over there at Neptune. I appreciate everybody who joined this presentation today live and anybody watching it in the future. And I hope everybody learned something today and has a great rest of their day.
All right. Thank you, Will, and thank you everybody for tuning in, and have a great day.